This is Alan Bush with ADMIS. In the stock index futures, we are seeing prices a little bit lower this morning. Looks like the main influence so far has been weaker than expected bank earnings this morning, although we did have earnings from banks on the bullish side yesterday. That influence somewhat reversed now with the third largest U.S. bank reporting weaker than anticipated earnings. So a little lower start, but we're feeling that as long as the accommodation remains and as long as the Fed funds target remains at 0 to 25 basis points, and as long as there is at least some QE in the system, stock index futures will continue to advance. Still looking for new highs, in fact, new historical highs in the Dow and the S&P within the next couple of weeks. Also, even though we're a little bit lower currently, I think we can see futures trading higher on the day today. Over in the currencies, seeing the euro currency advancing. This after European auto sales coming in stronger than expected. Also, we have the pound a little bit better with a UK house price index coming in relatively strong, and the yen gaining after Japan's core machinery orders coming in stronger than expected. However, we feel that the yen will probably not follow through to the upside as Japan's economy struggles. Also, we have the new value added tax to be implemented soon. So that is likely to be an additional negative, an additional drag on Japan's economy. So from here, I would look for the yen not to follow through to the upside. The longer term trend for the yen still appears to be lower. Also, we have quite a bit of pressure in the Australian dollar today. This after employment numbers coming in very weak. The guess was higher, and yet numbers there as far as employment is concerned coming in with some substantial decline. So we are thinking that the Australian dollar will continue to decline. Next objective on the downside is 85 cents. Over in the treasuries, we are seeing futures higher, being supported by lower stock index futures. I think I'd stand aside in treasuries for now, even though I have a bit of a negative bias over the next month and a half. And instead, I would focus on the long side of stock index futures and the short side of the Australian dollar. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.